Hi, this is Ken. It's Tuesday, so today I want to walk you through a chart analysis of Tesla stock. Last week, I shared a chart video focused on one key question, the battle around $449, and why that level didn't break. And right after that analysis, Tesla went into earnings. What happened next was a pretty intense sequence of events. Immediately after the earnings release, Tesla stock surged in the after-hours market. But during the conference call, sentiment shifted sharply and the stock sold off hard. Then, the very next day, rumors started circulating about a possible merger or integration with SpaceX. That sparked another rebound. By the end of the week, Tesla stock closed at $430.41. Today, based on this entire sequence, I want to focus on one central question. After all the major headlines are out, what is the market actually starting to look at now? This is not a video where I try to predict whether the stock will go up or down. Instead, we'll look at where the market stands right now, based on facts, price action, and the chart itself. Let's start with what happened immediately after earnings. If you look purely at the numbers, the earnings themselves were not disastrous. They weren't great, but they also weren't a collapse. And yet, after the initial after-hours rally, the stock was sold aggressively during the conference call. So the key question is not what happened, but why it happened. This sell-off was not caused by a sudden deterioration in Tesla's business. It wasn't the market saying Tesla's model is broken, and it wasn't a reaction to catastrophic financial results. What I see instead is something different. Leading into earnings, expectations had built up significantly. And after the conference call, those expectations were reset. The tone of guidance, concerns about continued heavy investment, and a lack of very clear, near-term numerical visibility. All of that combined to create a sense of uncertainty. And when uncertainty increases, market sentiment cools very quickly. That, in my view, is the true nature of the post-earnings sell-off. Now, there's one important thing we need to clarify here. Was this a structural sell-off? In other words, was this the kind of move where long-term capital exits the stock decisively? My answer is no. If long-term investors were truly abandoning Tesla, we would expect to see much more extreme volume and sustained selling pressure. But when you actually look at the chart, this did not feel like a panic-driven liquidation. What happened was not the rejection of Tesla as a company. It was an adjustment, a pullback that reflected how far expectations had run ahead of reality. In simple terms, sentiment peaked and then it rolled back. Shortly after that reset, we got the next catalyst, rumors about a possible merger or integration with SpaceX. And once again, the stock bounced. So the next question becomes, was this rebound the start of a new trend? This is where we need to stay very calm and objective. When you look at volume and volume delta, it's hard to say this move was driven by strong, high conviction buying. What we see instead looks more like short-term positioning, short covering, relief buying, traders reacting to an oversold condition. So, rather than pricing in a new long-term future, this move looks more like a correction of an overextended drop. The market wasn't turning bullish again. It was simply catching its breath. Let's summarize what we've seen so far. Earnings reset expectations. Sentiment cooled rapidly. Rumors triggered a temporary rebound. This sequence is very typical of a market that is not ready to fully commit in either direction. Now let's shift into the technical picture, starting with the weekly chart. On a weekly time frame, Tesla's broader trend is still upward. The 200-day moving average is far below current price levels, which tells us that the long-term trend has not broken. At the same time, momentum near recent highs has clearly slowed. This doesn't look like the end of an uptrend. It looks more like a consolidation phase after a strong advance. Next, let's look at the daily chart. On the daily time frame, the earnings volatility is very visible. Price action shows a clear struggle between upward continuation and a desire to test lower levels. What stands out here is the lack of a clear directional bias. This doesn't mean investors are confused. It means they're waiting for the next piece of information that justifies a strong move. You can see this hesitation in the moving averages as well. The 20-day and 50-day moving averages are tightly clustered, and price is not being pulled strongly in either direction. This usually suggests energy is being stored. Let's also check RSI. RSI shows that the previous overheating has already been resolved, but we're not seeing oversold conditions either. This is a very neutral setup, neither bullish nor bearish, and that's exactly why short-term price action feels difficult to read. Looking at volume and volume delta reinforces this view. Even during the post-earnings sell-off, we didn't see explosive volume expansion, and during the rebound, there wasn't sustained buying pressure either. What this tells us is simple. Right now, there isn't much capital rushing to reach a conclusion. Institutional investors are pausing, retail investors are pausing, the market has stepped back. Let's think about market psychology for a moment. Before earnings, there was optimism. After earnings, there was confusion. And now, both emotions have settled. We're in a phase of reassessment. In this phase, the most important question is not, what should I do right now? It's this: under what conditions would I change my view? For the upside, the key condition is clear. Can Tesla reclaim the $450 level with strong volume and hold it? Not just a temporary move above it, but sustained acceptance. On the downside, the level to watch is also clear. If price breaks below the $430 area, what happens next? Does it recover quickly, or does the rebound become weak and heavy? These two scenarios represent critical decision points for the market. And this is why I want to emphasize one thing. This is not a week to force trades. It's a preparation week. As emotional reactions fade, more participants are choosing to wait for confirmation, and that's exactly when calmly watching the chart matters most. To wrap up today's analysis, after earnings, confusion, and rumors, Tesla stock has stabilized around the $430 range. This level can be interpreted as either strength or weakness, and that ambiguity is the message. Rather than trying to predict direction, the smarter approach right now is to define the conditions that would change your outlook. That, in my view, is the most important thing in this market. That's all for today. If you found this analysis helpful, please give the video a like. I post Tesla-related analysis every day, so if you're not subscribed yet, I'd really appreciate it if you subscribe. Thank you, as always, for watching, and let's keep enjoying life with Tesla. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.